You know, it really does amaze me as to how many people in the financing sector are wanting interest rates to come down without actually understanding the consequences of what that means. Now, a few days ago, I did a stream here with Mike showing everybody the effects of housing affordability as to how it is near 39-year lows, and that we probably do not want interest rates to come down because that's going to make the housing supply a whole lot less, because at that point mortgage rates will just fall. Well, I just got this from Yahoo Finance not too long ago, about a day ago. Mortgage rates fall again, dropping by 0.5 point in 4 weeks. And you're probably wondering, did the Fed cut their rates? No, this is falling for other reasons. So this is what we're going to talk about in today's video, guys. Of course, before we get started, make sure to like, subscribe, comment. It really does help here with the algorithm on YouTube as well as Rumble. Guys, the goal, it is to eventually make this channel our own business. We're also going to start utilizing Twitter a lot more, so you can also follow us at Fatal Investing on Twitter too. So with that said, let's get started with this news in that mortgage rates fall again, dropping by 0.5 point in 4 weeks. Now, let's actually read as to what this is going on, because this isn't anything to do with the federal funds rate. This actually has to do with something else. We got mortgage rates drop for the 4th consecutive week, indicating that they may have peaked and convincing some home buyers to trickle back to the market. What in the world is happening? The average rate of the 30-year fixed mortgage declined to 7.29% from 7.44. Notice this, guys. Just from that small drop from 7.44 to 7.29, people are already like jumping into the housing market just because of that tiny, super tiny fall in the 30-year mortgage. That mark of a 0.5 point decline since the end of October when it hit at 7.79. So you guys can see that it has fallen since October at 7.79, almost 7.8, then 7.3. The recent rate relief was enough to pull some home buyers from the sidelines, even entry-level ones who had been priced out. Still, home prices and rates remain elevated as the inventory chokehold continues crushing affordability. Thing is that we're not. The Freddie Mac fixed rate 30-year mortgage eased further this week as mixed data continued to keep investors guessing. Daniel Hill, Realtor.com chief economist, said, in a few short weeks, mortgage rates have largely erased the sharp climb traversed in October. Nevertheless, though, the cost of borrowing remains high. Except for the most recent 7 weeks, today's rate is the highest since 2000. So I love it because it's fallen down, yet people are actually starting to buy. Now, what is the cause of this? So there's 2 things that affect the mortgage rate, or at least specifically the 30-year mortgage rate, and that is the federal funds rate, which, as you guys can see right over here, it's at 5.33, and it's remaining the same up until August, right? From August till now, it has remained the same. This is when the Fed essentially decided to pause, right? However, you guys could see that at the lowest it was at February 2022, 0.08. This is why interest rates at that point were at around, what, like 2%. So after that, interest rates, the federal funds rate, which is like the base level when it comes to interest rates, this is essentially the retail price for banks having to borrow money, right? So we get it at the marked up price, banks get it at the retail price, which is at this rate, meaning that in order for banks to actually make money, they will have to increase it by another like 2% in order for them to make money. That's essentially what that means, which is how we're getting the 7% interest rates when it comes to the 30-year mortgage. So that doesn't really explain as to why mortgage rates are falling. Now, granted, they haven't fallen like 1% or anything like that, but they have fallen a decent amount, right? From 7.79 to 7.29. However, there is one more thing that is tied to that of the 30-year mortgage, and that is the 10-year Treasury bond. A lot of people actually do not know this, but yes, guys, the 10-year Treasury bond is pretty correlated to that of the 30-year mortgage. So it's a little bit, I guess counterintuitive, but that is the case. We can see it right over here. The popular 30-year fixed mortgage rate is loosely benchmarked to the 10-year Treasury bond. Since the end of the Great Recession, the 30-year fixed mortgage rate has on average remained 1.7 percentage points higher than the 10-year Treasury bond yield. So if this is loosely tied to that of the 30-year mortgage, well, the reason why mortgage rates are actually falling, not because of the federal funds rate, but it's because of the fact, if we take a look at the 10-year US Treasury rate, we can see that, well, it reached a peak on, well, October 19th at 4.98. And as of today, it is down to, well, 4.41. So that is the reason why mortgage rates right now, at least on the 30-year, they are starting to fall. So you can see right over here, October 26th, reached their peak at 7.79, and right then and there, they're falling back down to 7.29. So that pretty much explains it. However, a lot of people are looking at this and they're like, oh, this is great news. Mortgage rates are falling. Yay, we're going to jump back in. Guys, the fact of the matter is that this is terrible news. Seriously, if you're already in the housing market, well, congratulations. But if you're somebody like me, where, you know, I'm a Gen Z, you're pretty much SOL at this point, right? I mean, it's already becoming very, very difficult to buy a home. And imagine if interest rates fall, it'll just make prices go up even higher. In fact, we covered this on one of the live streams. Housing affordability hits 39-year low. It's fair to expect prices to weaken, experts say. Yet we're not seeing that, right? We're not seeing that. This is why I'm so upset when the Fed says pause when it comes to interest rates, because this is not helpful. This is not helpful. Yes, on the short term, if they were to cut rates, you know, great, awesome. We get short-term money. You know, money becomes very, very easy to borrow, to do all that stuff. However, guys, the fact of the matter is that it's going to cause rampant inflation, especially in the housing market. People are hell-bent on buying property, right? And right now, they're off to the sidelines because they just can't afford it. If things were to fall, if that mortgage rate falls, we are going to be, well, as some people would say it, living in a pod and eating the bugs. You will own nothing and be happy, right? That's essentially what these people want. And if the Fed cuts this interest rate, we're going to be SOL very, very badly. The younger generation, you thought that it was difficult? Oh, baby, you haven't seen anything yet. And if you guys weren't there for the live stream, let me just show you what this article right here says about what needs to happen to bring home prices back down to an affordable rate. And here you have it. Returning the housing market to a more affordable levels will require one of three things. Either the 30-year mortgage rate needs to fall by 4.4%, bringing interest rates to around like 3.5%. The median household income needs to rise 62%, or home prices need to fall 38%. Now, I don't know about you, but 62% on an increase in household income isn't going to happen, right? Home prices falling by 38%. Okay, that might happen, but not with the Fed pausing rates. And if the 30-year mortgage falls down to 4.4%, oh, forget about it. The housing supply would just go straight to zero at that point, right? Obviously, I'm being hyperbolic, but you can pretty much assume that the housing supply would essentially be non-existent at that point, making a $500,000 house worth like, what, $1.5 million, maybe even $2 million, completely pricing out anybody from the housing market at that point. So the fact that mortgage rates are falling, it's actually a terrible thing. Not gonna lie, it's awful. Especially if you want to buy a house, right? Especially if you are a brand new homeowner, or if you're trying to buy your first house, guys, it's not a good thing. It really, really isn't. And me personally, if the Fed's seeing this, they should be ramping up interest rates, but they're not. And if they don't, if they continue to pause, which we're going to get the next FOMC on December 13th, if they continue to pause, this is going to make everything a lot more expensive. I definitely foresee that. But anyways, that's pretty much all I wanted to talk about in this video, guys. It is Black Friday, so markets will be closing. Actually, by the time you guys see this, markets would have already been closed at 1 p.m. So yeah, not really much news. It's kind of just nothing's really happening, right? Yesterday was Thanksgiving, so again, nothing's really much happening. But it's just a few news here that I figured people would like to know, people would like to see. So make sure to like, subscribe, comment. It really does help here with the algorithm on YouTube as well as Rumble. And of course, guys, our goal is to make this into a company. So with that said, peace out, and we'll see you all next time.